What's better than the gift of green? Stocks rallying ahead of the holidays, getting a good jump on the potential Santa Claus rally, which is the trading period that we're in now until the first 2 days of the new year. So it's been a banner year in 2024, and let's see if the new president means that 2025 will also be up. So we'll talk to our market pros, Gary Kaltbaum and Francis Newton-Stacy. So Gary, I want to talk to you first. I want to ask you, stocks are up again today with the Dow up this year, somewhere around 5,500 points. Is the Santa rally taking place broadly this year?
Finally today, I can tell you before today, the broad market has been very, very weak. I can list a dozen sectors that have been getting in trouble, whether it be housing or oils. The big stuff, like the big cap tech and stuff, is what's been leading, and that was on the move again today. And I got to tell you, after last Wednesday's 1,000-point drop, I was worried about whether we're going to get a end-of-year rally, but it looks like we're getting going right now as the broad market, I think, probably putting a good low today.
So quickly, Gary, so is the boost then, is there coming a boost because of the optimism of President-elect Trump's business-friendly policies?
I think the regulatory environment getting 100 times better is going to be huge. And the fact that we went from losing the Trump tax cuts to more than likely keeping them and more to come. The business and consumer keeping more of their money is always a good thing for the profits in the economy.
So, Francis, traditionally, markets have risen 77% in this Santa rally period. Since December 17th going into today, the S&P fell 2%, though. But this year, we've seen a lot of those losses thanks to, or this period, thanks to Fed Chairman Jay Powell's news conference talking about the timing of the rate cuts and the Fed signaling there'll be 2 interest rate cuts next year, not 4, like they had forecasted last September. So are the markets too focused on the Federal Reserve? Because earnings have been pretty good overall this year.
Yeah, there are 2 catalysts. As you say, the Federal Reserve was one for sure, but it hurt the bond market far more than it hurt the stock market. And I think that the rise in the 10-year has been trying to kind of compensate for potentially easy money coming into the new year with the fiscal bill being signed. Of course, we have promises from Doge and lots of rumors about cuts, and we'll just have to see how that works out. We don't have any numbers to actually price in as market participants. I'm very excited about this administration coming in. I'm very excited to see what Elon is going to do with these fiscal cuts. Obviously, he is, probably the smartest guy in the world and can think with the mechanical things. One of the things that has kept a recession off our backs with the Fed tightening has been the fiscal spending. So if they're going to drastically cut the fiscal spending, mechanically, we have to replace it with something. Volatility is down. Haven assets are down. So the fear in the market is down. The U.S. dollar with the incoming administration is strong. And barring any bad news, I see a Santa Claus rally continuing.
Santa Claus/Trump rally. So, Gary, what sectors are you watching the first half of the Trump administration then as he makes these policy changes?
Well, technology and financials always lead, and if they continue to be in good stead, I think we're in good stead. But I do want to repeat something. There's a heck of a lot of areas that have been pretty much left in the dust, and I would continue to avoid them. And all I can tell you right now, top 10 stocks in the S&P is about 40% of the S&P and 56% of the NASDAQ 100, and they're all acting well from Apple on down. If that continues, that will definitely be the place to be. But Francis nailed something big time, the 10-year yield, and I talk about that all the time versus talking about the Fed too much. If the 10-year yield starts going above 5 and more while the Fed's down at 4 1/4, that means they missed the mark. And then I think the market gets a little bit angry that they may have to raise rates to catch up. And if that ends up being the case, we will hit some headwinds with an expensive market at this juncture.
And Francis, we know that 10-year is what they base the mortgage prices or the price of mortgage rates. So, Francis, what policies do you think we need to follow and see if they pass from President-elect Trump to keep these markets going?
For me, it's going to be all about fiscal. So remember, when the Fed tightens, they're taking liquidity out of the system. The fiscal spending from the Biden administration has been so high that it has been re-liquefying the economy. Right. That can be a good thing in the sense that it keeps things liquid, but it can be a bad thing because it's all debt, right? And so when Trump gets into office, what he, Elon, and Vivek actually do with the fiscal spending is going to determine whether we have an inflationary threat, disinflation, or potentially if they cut it too much, we could have deflation and then the bond market would sell off.
And Gary Francis, I appreciate it. We're going to have to leave it there. And we'll see. I mean, we had the Grace Commission under the Reagan administration. Nothing really came of it. Well, now we have social media. We'll have to see what the end result is. Gary Francis, thank you.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.